Imagine if you knew exactly what the Fed was going to do before it did it. That would be some pretty valuable information, wouldn't it? Naturally, that's information that most Fed officials know. And not just that, but some of these officials have been using this information to trade. Yep, insider trading. Now today, I'm going to take you through the latest scandal at the Fed. I'm going to explain what it means and why it could be one of the most bullish signs for Bitcoin ever. Trust me on this, folks. It's a deep rabbit hole we go down, and it's something you won't want to miss.
Greetings from Transylvania. My name is Count Gaicula of Coin Bureau Castle here in the beautiful Carpathian Mountains. Every night, I arise from my crypt to bring you the most captivating crypto content you will ever see. I can transform myself into any creature of the night, except one. I am not, nor have been these many centuries, a financial advisor. This video is for your education and entertainment only. If you wish to join my legion of undead, subscribe to the channel and ping that bell too. That way I will find you again when the sun goes down. Now let us see what my undead brethren at the Federal Reserve have been up to this time.
So, what is this insider trading scandal of which I speak? Well, a few weeks ago, it was disclosed that 2 Fed officials had been trading in the markets last year. These were also some pretty senior officials at the Fed. You had Robert Kaplan and Eric Rosengren, the Fed chiefs in Dallas and Boston, respectively. But on top of that, you also had the vice chair, Richard Clarida, as well as, you guessed it, Jay Powell himself. Now, while some would say that it's suspect to allow Fed officials to trade at all, it was the fact that they were doing such active trading at one of the most contentious times in global economic history, a time when the Fed literally pumped trillions of dollars into the financial markets, an action that resulted in a stock market recovery the likes of which we have never seen. So, what did these trades look like? Well, when it came to Kaplan, he had made large dollar trades in single-name stocks, including the likes of Amazon, Apple, and Delta Airlines. Not only that, but he had traded stock futures and, get this, interest rate futures. Because, it's not like the Fed has any impact on interest rates. Now, in the case of Rosengren, he was trading stocks and other instruments in real estate investment trusts. Now, why is that interesting? Well, Mr. Rosengren has been one of the most vocal voices at the Fed about real estate. He has advocated policy that would have had an impact on the real estate sector. And not only that, but according to these disclosures, he has also held shares in a real estate investment trust that bought mortgage-backed securities. Now, may I remind you that as part of its quantitative easing program, the Fed buys about $40 billion of mortgage-backed securities a month. Then we have the trades of the vice chair, the right-hand man to Jay Powell himself. On the 27th of February last year, he traded between $1 to $5 million out of a bond fund into a stocks fund. The very next day, Powell took the unusual step of announcing that the pandemic posed a growing threat to the US economy and that the Fed was closely monitoring it. Now, Mr. Clarida no doubt knew that this announcement was going to be made. The question is whether these trades were a complete coincidence or whether they were informed by the information he had. It's a tricky one for sure. It gets even trickier when it comes to Jay Powell's trades. He sold between $1 million and $5 million worth of stock on October the 1st last year. This was not around any sort of Fed announcement or action, so it appears that these trades were less problematic than those of his colleagues. I should also note that for everyone that was involved in these trades, it was completely above board, according to the Fed's ethics policy on internal trading. This is indeed true. But the question then comes down to whether the rules themselves were outdated and ill-advised. They were the same rules that applied to other federal officials. But it seems quite illogical to me that the men that literally control the money printing press would have the same trading rules as your bog-standard federal employee. Moreover, it's not as if these Fed officials are starved of income. As we've seen, most have pretty sizable portfolios, and they all have cushy, taxpayer-funded, six-figure salaries. Now, irrespective of whether these trades were inside information or not, they dealt a pretty significant blow to the Fed's credibility, a credibility that was already under strain due to the recent mishandling of inflation. But that's something we'll get onto a bit later. I should also point out that there are a number of other Fed officials who hold stocks and other assets. All of this is in disclosure forms, which I've linked to below for you to peruse. Anywho, the news of these trades managed to draw the ire of many, including those on Capitol Hill. The news was first broken by a story in the Wall Street Journal last month. This was on the trades that were done by Robert Kaplan and Rosengren. Of course, the story caught fire, and the Fed officials involved tried to get ahead of the news. Both said that they would be closing out of their positions. According to Rosengren, quote, "While my personal saving and investment transactions have complied with the Federal Reserve's ethics rules, I have decided to address even the appearance of any conflict of interest by taking the following steps." Of course, this was not enough to quell the outrage, so both of these officials decided to retire. In the case of Kaplan, the retirement was because he didn't want the focus on his trades to be a distraction from his work at the Fed. When it comes to Rosengren, he also took early retirement, but this was in relation to a personal health consideration and not his trades. Now, irrespective of whether these officials hoped the issue would just die down, it didn't. People began to pore over the other disclosures of those at the Fed, and this led to them coming across the trades of Clarida. And unluckily for the Fed, eternal Wall Street warrior Elizabeth Warren caught wind of the story and decided to jump on it. She called on the Fed to ban officials from trading stocks. Credit to Jerome Powell, he decided to take action. He said that he would open a fresh and comprehensive examination of the central bank's rules when it came to trading activity of senior officials. Then, earlier in October, the Fed's internal watchdog said it would open a review into the trading activity and would suggest revised ethics guidelines for all those involved at the Fed. Of course, this was not good enough for Liz Warren. She was calling for an insider trading investigation by the SEC. Then again, it's unlikely that the SEC was able to commit a lot of resources to this, as it was too busy going after those dastardly DeFi projects and villainous crypto personalities. Anywho, about a week ago, the Fed came out with its revised ethics procedure for employees. It banned policymakers at the Fed from owning individual stocks, bonds, or agency securities and derivatives. They could hold diversified funds, but had to hold them for over a year, disclose these holdings, and give a 30-day warning before they were thinking of buying or selling. I'll give credit to Powell where it's due. That was some quick and swift action that he hoped would reinstall confidence in the Fed. Time will tell as to whether it did, but it's clear that Powell has lost the support of the likes of Liz Warren. She is the progressive champion in the Senate and is now actively opposed to his renomination next year. Dialing up the rhetoric to 10, she said, quote, "Over and over, you have acted to make our banking system less safe, and that makes you a dangerous man to head up the Fed, and it's why I will oppose your renomination." Whether he has made the banking system less safe is up for debate. But it's weird that she was ignoring the bigger elephant in the room, and that was inflation. It's a much bigger problem that is having much more severe consequences for the average citizen. And that's what I want to take a look at next. Ever since last year, the Fed has been making it rain more than a Lil Wayne music video. Trillions upon trillions of dollars have flooded into the financial markets. Way back in April last year, I raised concerns about the impact this would have on inflation in the broader economy. And since that time, I've made several videos that have warned about this sleeping hidden threat. Well, today, inflation is everywhere, from food to fuel, cars to clothes, electronics to energy. In fact, in September, CPI inflation was at 5.4% and remained at its highest level for decades. This was about the same rate that we saw in June and July, which shows that it is persistent, the exact opposite of the transitory magic word the Fed had been using in the past. And it's pretty damn likely that this is severely undercounting the actual level of inflation that there is in the economy. The CPI measure is highly flawed, and I explained it in greater detail in a previous video of mine, and that is in the top right. The inflation is even more concerning when you look at the PPI metric, Producer Price Inflation. It surged to 8.6% in September, which is the highest that it's been since record-keeping started back in 2010. While it's true that a lot of this inflation is coming from cost-push external sources, supply chain issues, for example, one cannot deny that the excess money in the system is having an impact. More money chasing fewer goods means prices go up. Economics 101. Now, despite how much the Fed was hoping that this was transitory, that has been disproven. And it appears that the Fed has taken a 180 on that. Powell has acknowledged that inflation is a major concern of his. He then said that he thinks that it's time to start tapering the Fed's bond buying because of this. Essentially, the Fed is going to turn down the flow on those money taps and eventually look to raise rates. Of course, this comes with a whole host of other implications for the broader economy. Implications that could impact jobs growth and broader social agendas. This is exactly the agenda that the progressives in Washington are trying to push. And who is one of the leading lights on the progressive side of the Senate? That's right, Elizabeth Warren. And that's where this gets quite interesting. If it is true that Jerome Powell is going to start taking a more hawkish stance on inflation, this could place him at odds with those politicians that would like to see the Fed keep a dovish view on it. It's pretty telling that the main concern that Warren had with Powell was, quote, Wall Street regulation, when inflation is the thing that citizens appear to be most worried about. In fact, I decided to do a search online to find all the times that Warren has talked about inflation. There were only a few occasions. Back in May of this year, she dismissed all the inflation fears, saying it just wasn't happening. According to her, it was all political and was just sour grapes by some Republicans. Then in July, she was again talking about inflation, or rather, should I say, inflation hedges. This was basically part of her crusade against Bitcoin, where she was trying to make the case that Bitcoin is not an inflation hedge. She said, quote, the idea that there's somehow a protection or a hedge, I don't think that's going to be borne out over time. Now, that's interesting, and I will come back to this point. Anyways, back to the search, and I couldn't find any more mentions of inflation from her. I did the same search on her Twitter, and the only tweet that I could find was one that talked about the sky-high cost of childcare. Okay, so it's clear that inflation does not appear to be a big concern for her. This despite the fact that it is perhaps one of the biggest concerns across the country. Everyone is feeling it and talking about it, but not her. So I think it's pretty safe to say that she is a dove when it comes to inflation. And this then had me thinking, does it mean when it comes to Powell's renomination, will she look for fellow doves? You know what they say, of course, birds of a feather and all that. Now, what's important to note here is that Warren commands a lot of sway in the Democrat-controlled Senate. She can very easily convince her Dem colleagues about the need to get more Democrats at the Fed. She even brought up the fact that there are so many Republicans at the Fed when castigating Powell on his nomination. And this insider trading kerfuffle only gives her more ammo against him. I should also point out that progressive lawmakers in the House have also called for the replacement of Powell, but for different reasons. They were taking issue with his lack of action on climate change. Wait, what? I mean, I don't know what monetary policy has to do with that, but hey-ho. So, there is a serious risk that Powell could be voted down on renomination. A serious risk that we could have an uber dove as the next Fed chair. A serious risk that the high inflation that we're seeing now goes into overdrive, or, dare I say, hyperinflation. To quote Jack Dorsey, the CEO of Twitter, hyperinflation is going to change everything. It's happening. Now, as scary as that sounds, though, inflation is not the biggest risk we face from central banks. It's another cryptocurrency, a centralized shitcoin called a central bank digital currency, or CBDC. Now, for those of you who don't know, a CBDC is a digital currency that's issued and controlled by, a central bank. It's a dystopian technology which can be used for nefarious purposes. I don't have the time to go into it here, but feel free to watch my most recent video on it, and that is in the top right for your viewing pleasure. Now, that being said, one thing that I find particularly surprising is that although Elizabeth Warren does not think inflation is a concern, she does have a very specific view on CBDCs. In June of this year, she released a video that explained how she thinks CBDCs could be the solution to banking the nearly 33 million unbanked Americans. That is pretty interesting. She is not a fan of Bitcoin or other cryptocurrencies, but is a proponent of CBDCs. Okay, but what does this have to do with a new Fed chair? Well, that could be because of who the potential replacements for Powell could be. While a great deal of this is speculation at this point, someone who fits the bill could be Lael Brainerd, who is a member of the Federal Reserve Board of Governors. She appears to be more dovish on inflation than Powell and is, most importantly, a Democrat. But that's not all. She's also the Fed governor who is spearheading efforts to roll out that Fed-issued CBDC. I talked about this at great length in my video on what the Fed thinks of crypto, and you know where to go for that good stuff. Okay, so that's the hidden CBDC agenda. Less obvious than the inflation narrative, but concerning nonetheless. But of course, we don't have to be slaves to our monetary overlords. There are legitimate alternatives, and those are exactly the alternatives that Warren dismisses. Yep, I am, of course, talking about Bitcoin. I've always maintained that Bitcoin is one of the best hedges against inflation. That's based not only on its inherent qualities, but also historical precedent. Let's take a look at those inherent qualities, though. There is a hard, protocol-defined limit of 21 million coins. This makes it increasingly rare and scarce. It cannot be printed into insignificance. Most of us know this, but it seems that there are still many people in the traditional finance space who don't. Jamie Dimon. Then, when it comes to historical precedent, Bitcoin has been one of the best performing asset classes over the past 10 years. If you had bought and held Bitcoin, not only would you have preserved your purchasing power, you would have multiplied it. There are critics who will say Bitcoin is so volatile, prices change every day. How can it be a good store of value? Well, the goal of a store of value is long-term preservation of wealth. That is why hodling is such an effective investment strategy. But even if we would look at it on a shorter time frame, Bitcoin has been an amazing investment. For example, those of you stateside who got those $1,200 stimulus checks in March of last year. If you had put that into Bitcoin, it would now be worth $12,000. Yep, that's right, a 10x. However, if you'd kept that in your bank, it would have been worth 5% less in real terms. So, that's Plan B. But what about Plan C? Or, should I say, Plan E? That's Ethereum. Now, for those of you who track my personal portfolio, you will know that I hold about as much ETH as I hold Bitcoin. That's because I am of the view that ETH is ultra-sound money. With the latest protocol changes and the upgrade to ETH 2.0, ETH could become even more deflationary. It could become an asset that gets even scarcer by the day. Again, I don't have the time to go over it here, but do feel free to watch my most recent ETH video for an overview. That's in the top right. But what's even more compelling about these cryptocurrencies is that they could be the only alternative which gives us control of our finances in a CBDC reality. They are decentralized and cannot be inflated or deflated at will. They are a trustless asset built by the people for the people. Perhaps that's the reason politicians, regulators, and central bankers hate them so very much. Time to start wrapping this video up with a few closing thoughts. Insider trading at the Fed is no doubt a scandal. But of course, it's difficult to prove that they definitely were able to profit off of inside information. The larger issue here is the fact that they were able to do it in the first place. The rules were antiquated, and it's astonishing that they were not addressed sooner. That being said, I do worry that this scandal could be used as a pretense to replace Jay Powell at the Fed, as an excuse to get someone who is incredibly dovish on inflation and who won't slow down those money printers. And this is not speculation. Progressive politicians have made it clear that they are not happy with Powell, and they are of the view a Democrat will be better suited at the head. If that potential candidate is someone who is in favor of CBDCs that can easily control the population, well, even better. Or maybe that's the plan all along. Either way, we are due for some pretty serious inflation. The cat is out of the bag and getting busy amongst those pigeons. Choose your metaphor. And as inflation starts ramping up, it's going to seriously harm those that can afford it the least. Those with fiat savings in bank accounts. Those living paycheck to paycheck, struggling to buy basic necessities. Of course, we are sovereign individuals and we control our own destiny. Part of that requires us to plan for the future by preserving our purchasing power. Some buy houses, some buy gold, others stocks and bonds. Me, on the other hand, I load up on crypto. What do you do? And that's it for my video today, folks, but I would love to hear from you now. What do you think of the insider trading at the Fed? Are you concerned about potential replacement candidates for Powell? I'd love to know, so fire your comments down below. And while you're down there, you absolutely have to check out my socials page. This has links to all the other places that you can follow me off the tube. Most of these are verified by big blue ticks and include my Telegram channel, Twitter, Instagram, and TikTok. And, of course, my email newsletter, where I share a breakdown of my personal portfolio as well as a breakdown of some upcoming videos. Oh, and if you've been eyeing this magical little number right here, you can bag it in my merch store, also linked to below. All sales go towards supporting the channel and making sure that I can keep it ad-free. Now, you guys rock. If you found this video fire, then fire up the likes. Don't forget to subscribe to make sure you're in line to receive my latest crypto vibes. Oh, and hit that bell as well. We don't want it to get lonely. That's it for today, my fellow crypto fans. Guys, gotta fly.